For the review for our midterm for tax, what I wanted to first mention is that you are allowed 1 page of notes, front and back, and that needs to be on a regular sheet of paper. The second thing is the test has at least 12 or 14 points of extra credit available. So there are around 45 questions and then 6 or 7 additional extra credit type questions on the midterm, just to give you an idea. For those that are in my in-class section, we will take the test during our normal class of week 8. So that is, well, you can figure out the date for that. The midterm part of the tax return has been updated, and you will complete that on your own, and you will submit your answers. There's answers for a quiz-like item that we normally have for tax returns, where I ask you questions on the tax return. And then the second part is showing me that you actually did the tax return, and you'll submit the tax return separately as well inside the week 8 folder. Let's go ahead and jump right into the review. The first thing I wanted to remind you is a great way is to go into the VITA site. Use this link here that I have pasted. Takes you right to the VITA site. Go into the Link and Learn. This is the Link and Learn section. And then click on the areas that you may have the most trouble with and go through a lot of those slides, especially the slides with who can claim, who you can as a dependent, and filing statuses. I think those would be very helpful. And then also maybe what's gross income and what's not income could be helpful, as well as itemized deductions. So one of the big areas on the exam for the midterm is knowing filing status. Should this individual file a single or head of household? Those are the two biggest. Possibly married filing separate, maybe qualifying widow. It's pretty easy to know if you should file married filing joint. And so I'm going to give you numerous examples of items like the following here, where Tom lives with his friend, Randy, who is not related. So they live together. That's one key item. Randy disabled and receives $10,000 in Social Security. Thus, with only $10,000 in Social Security, that would fall below the threshold of being taxable. So none of that would be taxed. So he doesn't have any taxable income. Tom pays for 60% of his expenses. How could Tom file and how many exemptions? All right, well, based on this, Tom can claim Randy, and you can see the answers at the very bottom of this document. Tom can claim Randy as a dependent and therefore take his personal exemption. However, remember, for head of household rules, it has to be a relative that lives with you to claim head of household. Thus, Tom would have to file single in this situation, and that's how we would answer the question. We would say single with the 2 exemptions, himself and Randy. I also wanted you to know some of the basics of who's a qualifying child and who's a qualifying relative. Those spiral pages that I provided in the resources, I believe, and it may even be in week 1, but I know they're in the resources area. We'll start here. There's spiral pages that go through and give you kind of a line by line that says if the person is under 18, go down to part 2. If they're over 18, then this person cannot be a qualifying child. And then with like a little asterisk saying, well, they can still be a qualifying child if you meet these criteria. A, if they're full-time in school, or at least, or full-time in school for at least 1 semester. If they're and then there are some others like being disabled. And then know the items, what counts and what doesn't count as being a qualifying relative. Does the individual have to live with you or not? So there are different things to know about qualifying relative as well, who counts. So I will ask you a few scenarios based on these as well. As you'll find in most of this test, most of them are not calculated based. You will, like, I won't have you I don't expect you to memorize or have in your notes any of the phase-out limits. You can easily go and look those up whenever you're doing a tax return. And a lot of times a tax return will do it for you, so you don't even have to do that. But if somebody would ever ask you, it's easy enough to pull up. And the fact that they change so much year to year, that it's kind of silly to memorize 1 year's worth when it's going to be probably different next year. So I'm not going to have you don't have to memorize like the standard deduction amounts. If I ask you any questions on that, I will give you the standard deduction amounts for each type of status, so single, married, filing, separate. And then I also give you the additional standard deduction amounts. And you'll want to know what are the scenarios when somebody can take an additional standard deduction. So I do have a couple questions on that. Knowing when and how much. You don't have to know how much, but know when you can use those additional standard deduction amounts. Itemized deductions. So you'll want to go through all of our week 6 material, which was, I believe it was chapter 5 in our textbook, but we covered it in week 6. The itemized deductions, you'll want to know these. What counts as an itemized deduction? Where does it fall in the itemized deduction list? And do they typically have a limit, or are you not allowed a certain amount of expenses up front? Like, for example, I would like for you to know that medical expenses, just because you have $300 in medical expenses, you're not going to be able to take that because you have to meet at least 10% of your AGI. So that's something that has, some kind of a barrier. And I want you to know which ones those are, and then be able to tell me if something is deductible as an itemized deduction. When you're looking at if something should be included or not included in gross income, you'll want to go back to our week 4 notes, which is chapter 3. The easiest thing for tax is simply to know what is not taxable, because so many things can be taxable, but if you can narrow it down to what items are not taxable, that's going to give you a pretty good idea then that everything else that you can think of is going to be taxable. So really focus on that non-taxable part of that. What kind of interests can you receive that are either taxable or non-taxable? We looked at that again in week 4, the chapter 3. We also looked at ordinary versus qualified dividends. What's the difference between the two types of dividends? And tax-wise, how is there a difference, if any? So you'll want to know that. Go back and look at those notes. Because as you'll find, there is a difference between having something just be an ordinary dividend and then having it separately being qualified as a qualified dividend. And it's better to have it as a qualified dividend. Alimony versus divorce settlements and tax treatments. So knowing that, for example, if you receive alimony payments, they are taxable. If you give alimony payments, they are deductible as a deduction on the front side of the 1040. Whereas divorce settlements, just because you inherit the house doesn't mean you have to pay tax on the house. You only pay taxes on the item you receive, say it may be like an automobile, when you actually turn around and sell it at a later point. And your basis will be the original basis that the item was bought for, not necessarily what it was transferred to you at when it was bought. I want you to be able to tell me and be able to recognize these forms. If I say student loan interest comes on this form, I'd want you to be able to know that that's a 1098E, or your wages come on a W-2. So some of the more common forms that we've looked at. I have quite a few questions, and I had something like this on one of our homework examples that I want you to be able to know. So if I give you something like moving expense, you're going to tell me that that's a deduction for AGI. It's before AGI. Or I tell you the standard deduction. A standard deduction is a deduction from AGI. It's after, it's on the back side of the 1040. Or maybe I give you medical expenses. that you are able to itemize. That would be a from AGI, because itemized deductions are on the back side of the 1040. And then maybe I give you the child independent care. Well, that's a credit, and we would want to list it as so. Along with the credits, being able to differentiate between what's a refundable credit and a non-refundable credit, and maybe even which ones could go both ways depending on your tax liability. I also want you to know the basics, the understanding of the American Opportunity Credit and the Lifetime Learning Credit. Who's allowed to take it? How much are you allowed to take? What type of costs are allowed? Is tuition allowed? Is room and board allowed? Is books allowed? Is equipment allowed? All of those type of things for the American Opportunity Credit. And go back into our Chapter 9 notes, which would have been just this past week. And you can remember that the American Opportunity Credit does allow tuition, and it does allow books, and even it allows equipment that is bought and used for school purposes. Whereas the Lifetime Learning Credit, you're only allowed your tuition and fees, and that's it. No books, no equipment. Also, know some of the caps. Like how much are you allowed to take for the American Opportunity Credit? And how much are you allowed to take for the Lifetime Learning Credit? And at what percentage is the Lifetime Learning Credit? What percentage of your expenses can you actually use as a credit? Along with the knowing how you're going to file and who you can claim as a dependent, I also want you to be able to tell me if the individual can use the child tax credit, and if they can use the child independent care credit. And then the last piece, remember the earned income credit. There are 5 things that I would like for you to know and be able to state, and we'll do these in just a couple minutes, is being able to tell me, can the individual claim the child as a deduction? Can they claim them for the child tax credit? Can they claim the earned income credit on the child? Can they claim the child tax credit? And then can they claim the child for head of household purposes? So those are the 5 things that usually go along with claiming someone, especially in a divorce situation. The last thing that I have on here that we did cover back in week, it would have been week 4 or 5, we looked at the Affordable Care Act. I want you to be able to tell me who must have insurance, what are the requirements, and if there is no insurance, what kind of a penalty are we looking at, especially for this tax year being, and we're covering whatever year that this is that we're covering. So for example, this year would be the 2015, but for future years you'll want to look at that for the year that you're actually in. So what I want to go through here is step by step, I want to determine, with all of this information, what is the actual gross income for this individual. So gross income definitely does include wages. Gross income does include qualified dividends. However, when they're taxed differently, so they're actually taken back out for just a calculation, but they are part of your gross income. So we are up to $45,000 in this case. If we receive a new car as a gift, the key word here is gift, and we want to make sure it actually is a gift. If it comes from like our parents or some family members, that's going to be a gift. But if it came as a reward, but they called it a gift, say from your work, that's a lot more gray area. And there's a very good chance that that would be taxable and not counted as a gift. But we'll call it a gift here. So we're still at $45,000 because the gift is not included. We receive a prize on The Price is Right. That's included as taxable income. So now we're at $48,000. Regular dividends, yep, those are included just like qualified. So 48 plus 8 is 56. Interest on a corporate investment, Yep, that would be like getting bond interest back if we bought Walmart bonds. So that is taxable. So we were at 56, so now we're at 60,000. Municipal bond interest. Nope, remember municipal bond interest is a tax exempt. So we're still at 60. Scholarships for tuition. Nope, that's not included as long as all of that scholarship went towards tuition. So we're still at 60. Workman's comp. Nope, that's not taxed. We're still at 60. Unemployment. That is taxable. So now we're up to 70,000. And we talked about this briefly, but we'll get into it more in the second half of the semester as well. But if you have a loss on a stock, you're only allowed to take $3,000 for that current year. Every year, you're only allowed to take $3,000 of a loss on stock. So when we had a $70,000 income, we can deduct $3,000 off of that for this current year. So really our income is $67,000 gross income, because you are allowed to take $3,000 off. And you could come down here, oops, that's 67. Okay. Now let's look at a couple of these examples, and I want to know how many exemptions can we claim, filing status, child tax credit, and do they get the earned income credit. So Brenda lives with her unemployed boyfriend Tom, and Tom has 2 kids. Tom lives on his disability checks. Kids are 11 and 13. Kids do not pay over half of their own support. Brenda pays over half of Tom and the kids' support. Tom does not need to file, so therefore he has below the threshold. The only thing that I would want to include here, well, Tom lives on his disability, and that's all he has because he's unemployed. So exemptions. Brenda, since Tom does live with them and the kids, Brenda can claim all 4 of the exemptions. Brenda herself, Tom, and then Tom's 2 kids. The reason she can claim the 2 kids is because Tom does not have to file. Therefore, the kids are not considered a qualifying child of Tom. If the kids were a qualifying child of Tom, because maybe he had to file, then Brenda would not be able to claim them even if he wanted her to. You're not allowed to do that per tax law. So exemptions, she can include 4. However, her filing status, because no one else is related to her, she would have to file a single. The child tax credit, she can't take that because the kids do have to be a qualifying child in order to claim the child tax credit. So nope, that's not allowed. Same with the earned income credit. She would not be able to claim the earned income credit because the kids are not her qualifying children. If she legally adopted them or something like that, then yes, she would. Or if they got married, then they could claim earned income credit. So we come down here and let's briefly check, make sure I got the answers right. She claimed independent. Yep, 4 kids, must file single. And she does not get to claim the child tax credit. Looks good. Joe lives with his kid who's 8 the entire year and his girlfriend who earns $7,000 part-time and is on Social Security disability. Joe pays over half of their support. Joe has an AGI of 33,000. Okay, exemptions. Well, with this one, we can definitely claim our kid. And the girlfriend, we have to think, can we claim her? And the answer is no. Even though she lives with us and Joe pays over half the support, she makes over the threshold of earned income. Remember, the earned income cannot be over the exemption amount, in which for 2015 is $4,000. So she does make over that, therefore we cannot claim her as a dependent. So exemptions, we can just claim Joe and the kid, so 2. Filing status, he can claim head of household because the kid is his own. It's a qualifying child of his. Child tax credit, yes, because again, the kid is 16 or younger, and it is his qualifying child. And with a single earned income wages of $33,000, Joe most likely would be able to claim earned income credit. He would be on the low end of it, but he would still get a portion. So let's make sure we got everything. He can claim the 2 dependents. Yep. Claim head of household. Yep. Girlfriend earns too much, therefore he can't claim her. He can claim the child tax credit, and his income is still in the threshold where he can claim some earned income credit. It'd be on the lower end, but he can still do it. Mary, who's 19, is a full-time college student, eligible for the American Opportunity Credit. She pays tuition of $3,000 on loans, and she lives with her parents, and they claim her. So what is her filing status? Her filing status would be single. Her exemptions, she can't claim any. Her parents are claiming her because they meet all the requirements. Education credit, nope, she can't claim that. The only thing that would help here is if her parents went ahead and claimed for Mary the American Opportunity Credit. They can claim it, Mary cannot. So let's check our answers. Mary cannot claim the exemptions, good. Parents will claim her. She has to file single, yep. American Opportunity Credit is available only to her parents. Okay, looks good. Okay, last one of this set. Stephanie lives with her 3-year-old son in 4 months, for 4 months of the year, and the child lives with the father the other 8. Stephanie and her father pay over half of the child's support. For the separation agreement this year, Stephanie gets to claim the child as a dependent. How many exemptions? Well, she can claim 2, herself and the child, for the agreement. Filing status, she has to file single. The kid did not live with her at least half of the year. Child tax credit, yes, because of the divorce agreement, she can claim the exemption and child tax credit. Earned income credit, that answer would be no. She cannot claim the earned income credit because it isn't, the child did not live with her at least 6 months of the year. So one final check here. For the agreement, she can claim the child as a dependent, which also means she can claim the child tax credit. She does file single, and she cannot claim the earned income credit because the child did not live with her all year, or at least 6 months. The final thing I really want you to know, getting out of this first semester, and especially being able to really recognize things on the 1040, where does it go on the 1040, if anywhere? So if you have a situation and it doesn't need to go on the 1040, if so, where? And if not, tell me that as well. So above the line means anything on the front side of the 1040. Below the line is on the back side of the 1040. As a deduction, that's what I didn't specify enough, as a deduction, because also on the back side you could have a credit, or it's neither. First one here, federal tax deduction. You don't get to take that as a credit or a deduction. That is nothing. No deduction or credit. Child care so the parent can work. Yep, that's a credit. That's a credit for child independent care credit. Earned income credit. Yep, that's a credit. Alimony paid. That's a deduction from your AGI, so that's above the line, or for your AGI, so that's above the line. Child support received, nothing. You can't deduct it, or you don't add it in, you don't deduct it. Unreimbursed job expenses, that would be a potential below the line deduction, because that is a potential itemized deduction. Same with number 7, the home mortgage interest. That is a below the line deduction because it is a potential itemized. Credit card interest, nothing, no credit or deduction for a credit card interest. 3 hours of CPA tax work that was donated for charity purposes, that's not allowed as a deduction either. Only cash payments or goods with a fair market value, not donated time. Okay, that completes the review. The midterm test and actual quiz that goes along with the midterm tax return, that will be due by the time we start week 9. So you'll have not only the current week, but you'll also have week 8, all of week 8 to complete it, even after the test into that following week. It'll be due the normal due date before we start into the new material starting the second half of the semester. Again, you'll do that at your own leisure, and everything has been updated, so make sure you check to see if you have the most updated items for that tax return, including the PDF files that show the W-2, the 1099s, etc. Okay, with that, well, good luck, and hopefully with the extra credit, you will do fairly well.